evening. Today, what are we going to do? Uh, Another day of the same series. Everyone, first of all, please go ahead and like this particular session. It is super important that I get a source of motivation, and you are the source of motivation. By sharing the session, by liking the session, definitely you make me feel that yes, bring up something more questions, more usable questions, more relevant questions for the examination from the book itself so that you can prepare properly. So I would still give the credit to continue the series with you only, and I would love to get the appreciation recognition from your side with the same level of intensity. I would say. Acha everyone. Now the first point. What are we going to do today? We were discussing module B. I'm going to start with another topic which is called financial and operating leverages. The most important part about the financial and operating leverages is this topic is always asked in the exam. When I say financial and operating leverage, financial and operating leverage is always asked in the examination and till date. And the case study was asked in the November examination, which was roughly 5 to 6 marks because there was a case study. There were 3 questions with it. So technically 3 to 4 questions were attached with it. We had to calculate everything for that particular question. That means you had to calculate earning per share, EBIT, and then the different kinds of leverages. Leverages are basically of 3 types: financial, operating, and the last one is combined, which is the mixture of both the kind of leverages, everyone. So that's leverages for you. Now, the point is, what do you mean by operating leverage? Operating leverage says कि I wish I can increase my revenue from my current earnings only. मतलब whatever way I am working currently na, I wish I could increase my business with the current earnings. I'm not saying my previous earnings or something else. Nah. With my current earnings, I would love to increase my with my current status, with my current scale of operations, I would love to have a greater sense of earning. While financial says, nahi, I think we have earned good enough with our current level. I wish I can earn more. And how can I earn more, everyone? Maybe I can scale up my operations. Maybe I can invest further in terms of the I can invest in terms of the assets.Maybe I can invest in terms of the plant. I can increase the output that is being produced. If I'll produce more, maybe I'll sell more as well. You know? So that is how we specify the operating and financial leverage. Then they say combined. Matlab, you do have to do nothing. You just have to write the formula for financial leverage. Then you have to multiply it by operating leverage. What you're left with is called combined leverage. That's one of the basic definition of leverages. The entire definition of leverages can be defined according to this. Now the point is, what are we going to do today? Obviously, we will be starting with this particular scenario. We'll be studying it in detail. What exactly is covered in this area, hai na? So let's understand it from the point of view of accounting, from the point of view of entire ABFM. Okay, here comes the first question, everyone. Number 1. What is the measure of the return on investments? We are always looking forward to what? Um, Return for equity shareholders in a business. Everyone, what are they talking about? Debt ratio, earning per share, financial leverage, as well as total assets. How do we define it, everyone? Okay, let's look at this. Debt ratio is the proportion of debt in terms of equity. Then we have the earning per share. Then we have financial leverage. Financial leverage is related to the area of the increase in the scale of operations and total assets. That's not the point there, है ना? So the correct answer is earning per share. Why earning per share, everyone? Earning per share is your net operating profits, net profit divided by the definition of earning per share is net profits after tax and preference dividend. Matlab we have paid both of them divided by um, just a moment, divided by number of equity shareholders. Matlab it's like there is a cake and this cake has to be divided among certain number of people. So we have to find it, है ना? We have to divide it by the number of shareholders. This is the point that we were looking at. Now comes, this is the formula. Now everyone, if I have a bigger share of cake, is it good or bad? If I have a bigger cake share, then definitely it's good. Then the problem would be what? When the share of the cake is smaller, then it's something that's gonna hurt me for sure. Isn't it, everyone? That is how we define this specific area itself. Okay, so this is how earning per share is defined. Higher the amount, higher the better. Overall, if I have better amount, it is always something which is more attractive for the businessman. If he's putting money into the business and he gets more money back, then he's always happy. कि अच्छा ठीक है, if I'm investing something, I'm getting something out of it as well. What constraints is faced when the increasing borrowing without increasing equity in the financial leverage? Oh, think about it, everyone. The business is increasing its borrowing. Matlab, what are they doing? They are increasing their debt. Acha, debt and equity have a very strong bond, pata hai? A higher interest rate on the borrowing, lower return on equity, decreased cushion to absorb adverse events, or reduced cost of borrowing. First of all, there is no reduction in the cost of borrowing for sure, because ultimately we are paying, है ना? But what if my debt is increasing, my liability is increasing, the amount that I have to pay, my burden is increasing. All these things are happening. So when we talk about what constraint is faced when increasing borrowings without increasing equity in financial leverage, when we talk about this, what are we doing? We are increasing our debt. In this case, when we increase our debt, the interest rates are high and the principal repayments are also high. That means if we pay both of these, our profit will decline. When our profit declines, the portion for equity is going to decline further. Matlab equity is gonna be hurt badly. So ultimately, if equity's money is being used and they are not able to put much money into the savings, what's happening? In the near future, when there would be a problem, there is nobody to provide us a cushion. Technically, the decreased cushion to absorb the adverse events, because equity will not be able to save enough for the future of the organizations, and this is not good for the organization. So that's an important area to understand. If you increase your debt a lot, then it is very much risky for the organization, because a lot of debt means you have a lot of risk involved, financial risk. The ability to take more loans is also affected badly, because you already have loans. And basically, when you have too much of loans, how will you justify it? How will you answer to the government and towards the income tax department that you want more loans? You won't be able to justify yourself, and this is definitely not good. That's why whenever your financial risk increases, even equity people try to move away. They will try to sell their shares to someone else. Ki, "Okay, the company is dying. I don't think I'll get even a single penny back. Sell away the shares of this organization and get rid of it." So they're absolutely clear about the fact, because always you will put money into an organization which seems to be safe. Obviously, not everything is going to be safe. That's why all those scams happen. But they would always want to work with an organization which seems to be safe. है ना? चलिए. Now comes the next point. How is financial leverage described in context of the impact of equity? a single-edged sword, a modern strategy, a double-edged sword, or risk-free approach? Okay, financial leverage. Basically, what we did is financial leverage can be defined in a very simple manner. Basically, the organization felt, Arey, we need money. They said, okay, we need money. What next? Then, acha everyone, if I need money and taking too much of equity will cost me voting powers. It will cost me voting powers, na? So, let's write it down that we are talking about voting powers. You are sharing your voting powers with someone, you don't want to do that, we are all sorted with it. That's why what you did was you took a loan. As soon as you took a loan, what is happening? Your debt is increasing. Fine. It is tax deductible, so interest is basically something which is charge and expense. Now the point is, this loan has helped you and the project has made good profit. The project has made good profit, has made profit. Everyone, once they have made profit, what next, everyone? Once they have made this huge amount of profit, what will they do? If they have made a good profit, the next thing that they have to do is, if you have made good profit, then equity shareholder is standing in front of you. Ki Hanji, where is my money? Excuse me. Why are you not giving me my share? So technically, because of debt, your reward is increasing. Reward is profit or dividend that we are receiving now. So equity shareholder is like, wow, the company is growing and I'm not getting my share. So technically, you took a loan so that you don't have to bear the problems of equity. But ultimately, you will be still answerable to equity that the company has started making good money. Where is its share? It is gonna cry about that fact. So it's a double-edged sword. A sword which gonna hurt you badly. Even if you are growing through equity, then what will happen? Equity shareholders will wait कि bonus shares कब आ रहे हैं? When are we getting the right shares, bonus shares? The directors of the company would be waiting for swap shares, swaptions, and नहीं, they would be looking forward to ESOPs. है ना? The company is going good, so equity shareholders are gonna be happy and they would be demanding. While when we talk about the debts, the debt is never gonna ask you something. You take a loan, you pay it back, they will never ask for more money until unless they are definitely involved in some kind of fraud, of course. Otherwise, if I took a loan for 10 lakh for 10% rate of interest, there is no other point of question for me, isn't it? The companies are gonna come after me. So we are all sorted about this part. Done, everyone? So when we talk about this area, it's a double-edged sword. You earn more, you have to pay more. You earn less, then you have to pay less, but then your share capital will also be less. Chaliye. Then comes the next part is double-edged sword done. Then what is the formula for degree of financial leverage? Acha everyone, financial leverage is gonna help us to grow in the long term. Always remember, this is not something which helps us in the short term. This is something which helps in the long term. If it is gonna help us in the long term, what's the formula for it? It is EPS upon EBIT, or EBT upon EBIT, or EPS upon EBT, or EPS EBT upon EPS. EBT or EBIT is what, everyone? EBIT. This is earnings before interest and tax, while EBT, earnings before tax, and earning per share we have just calculated. Let me tell you what to do. You take up your selling price minus your variable cost, you will get your contribution, then remove your fixed cost, then what you are left with is profit, which is also called earnings before interest and tax. First of all, you pay interest, then what you're left with, earning before tax, then you pay tax, then you're left with earnings after tax. This is the entire process that you have to follow in this area. And how do we calculate it, everyone? EBIT, EBT. The formula for financial leverage is basically EBIT divided by EBT. Acha, in this case it is written wrong. Let me just, it's not given in any of the options. So let me just correct it a bit. It is actually EBIT upon EBT. Okay? The answer is B. That is, we're gonna find out how much this financial leverage is gonna cost us. Financial leverage means it's a burden because you have taken this particular risk now. Acha, okay. I think they made a mistake as well. That is the normal formula that I've shared. There is one more thing. This is the normal formula. When we talk about the change now, in terms of change, we have EPS divided by EBIT. In terms of the change. Change means we are talking about the change in EPS, that is EPS for the previous year, current year. Then what you do is divided by EPS of the previous year. This means EPS 1, 2 minus 1, right? EPS of previous year, previous and current year, and you divide it by EPS. So technically that is change in EPS divided by change in EBIT. EBIT means you are going to consider two specific years where you are going to basically, what are we going to do is we are going to question it. We are going to tell it out. We have to find it. So the answer is EPS and EBIT. I'm sorry. Where we have EBIT upon EPS. Done. Next is, why is degree of financial leverage important in calculating correlation between EPS and EBIT? Actually, it is very, very important actually. These are the only two terms which we talk about now. Earning per share is what? What is the piece of cake which is left for the equity shareholders when everybody else has eaten up? And this is the amount before you give even a single penny to the people from whom you have lent money, or from the people to whom you have given money. In any case, covering all those areas. Matlab, we are taking up the people who will get the ultimate amount and the money before paying even a single penny to anyone. What's the amount, right? What would be the answer? To estimate the value of the business or assets, to determine the risk, right attached, right mix of debt and equity. But just like if I make a cake, I need to know what's the perfect blend for cake in terms of baking soda, in terms of the multipurpose flour, in terms of the sugar. In terms of a business, we have to be very clear about what amount of debt we are going to take and how much money I'm going to put off my own. Because taking too much of debt is risky. Taking no debts is also stupidity, because then what will happen? If there are no debts, you don't have a tax deductible expense for you there. Especially when by taking that loan while paying from the regular business, it would be helpful to reduce your profit. Less profit means less tax. Less tax means more money for the equity. To evaluate the risk of business, to establish the correlation between operating and interest expense. EPS and EBIT. This is the degree of financial leverage which is used for in this case. So the correct answer for this question is actually, as you can see, this is interest and tax. None of them is related to the area of interest is finance based and taxation is by the end. So technically, I'm sorry, when we are trying to reach to EBIT to EPS, the company reaches out from EBIT to the ultimate amount. So technically, first of all, there is operating profit. This is before EBIT. Whatever we have is operating because we have to run our business. And then we consider interest, and then we consider tax, and that's how we reach the ultimate end, the cake piece which is left for the equity shareholders. So the answer is D, to establish the correlation between operating profit and interest expense. Done, everyone? Now comes the next question. Next question is related to the area of, we are given sales. This is an important question. I would say you should definitely do it. It's an important question for your examination. First of all, your selling price is 24 lakhs. Your variable cost is 50%. That means it is 12 lakh. Left with 12 lakh. Then we have fixed cost of rupees 10 lakh. We are left with 2 lakh rupees. This is your earnings before interest and tax. They haven't talked about any kind of interest, did they? Yes, they talked about it. This is, they have borrowed 10 lakh at the rate of 10%. Matlab your interest is 10%. 1 lakh rupees goes into interest. The company earned 24 lakh. Think about it, they're left with almost nothing. 1 lakh rupees is their earnings before tax, and the tax is 50%. That means earning before tax, they are thinking we are getting 1 lakh minus taxes 50% of it. You're left with barely 50,000. This particular point is definitely something which is very alarming for the organization because they're left with almost nothing. You know? So this is EBIT upon EBT. The formula is, I've calculated everything for you. The basic reason is that you should understand how to go through it step by step. So we have EBIT divided by EBT. That is 2 lakh divided by 1 lakh. This is EBIT upon EBT. So in this case, the correct answer is 2. Okay, this is actually a book question. The reason behind doing this question with you is this only, so that when you do all these questions, you get more clear about how to deal with such kind of questions. Acha everyone, we have talked about this. We have talked about numerical portion. We have talked about financial leverage. We talked about the basic of operating leverage as well. Now, what am I going to talk about today? The good news is the sale has started. Now, what does it mean? How can it benefit you? Let me take you to our website so that you can find out how to utilize this opportunity for your benefit. You know, because the basic reason for bringing up these opportunities is, whenever you are looking forward towards your preparation, you can grab this opportunity and benefit yourself out of it. Achha everyone, go on to our website www.adda247.com. You know, that's the website. Go on to this area, go on to the area of JIB and CIB, go on to the area of CIIB June 2024. As soon as you go on to this area, you can see the first thing that we have is the Mahapack. Double validity is here, everyone. Double validity means what? Double validity means you take up the course, you have, if it is for 6 months, you're getting it for 12 months. Pay for 6 months, get for 12 months, and use the code Y541 and apply it, and you will get it for 80% discount. 6823.95, everyone. A good opportunity. You are having double validity. Double validity simply means you get it for an entire year. The entire CIB is available for you. Bilingual, English medium, recorded, whatever is coming up in the next 1 year in terms of batches, test series, ebooks, then even the revision batches, all these things are covered. So this is beneficial for you now. So hurry up and avail this benefit right away. Use the code Y541 and use this discount opportunity for your benefit. Till then, everyone, I'll be meeting you tomorrow at the same time. So please be there for the classes. We'll be meeting for the regular series every single day in the morning itself. So please be there at 7 a.m.